Hey everybody, JC Parets here, and I am joined by Joe Fahmy. What's up, Joe?
How are you, JC?
Listen, you were like, hey, just nice little Thursday, getting together. I don't know if you got any wine. I'm already getting the party started. Almost 5:30.
What are you trading?
I
Cryptos?
just bought some more Cardano.
Yeah.
Literally. Are we gonna do that? Are we gonna do that? Go right into the trades? I want to talk about booze, and Fahmy's like, I don't care. What are you buying?
No, we can talk about whatever you want. It's fine.
Listen, I just bought more Cardano. Fortunately, we've been on the right side of this one. It's been a leader. It's the third largest cryptocurrency. And, fortunately, we've been on the right side. And I like to add to winning positions rather than averaging down. How do you feel about that strategy?
Yeah, that's usually my strategy. I try.
You don't like averaging down? You don't like adding to losing positions, only winning ones, or it depends on the situation?
It depends on the situation. If you like something longer term and you have conviction, I mean, if you were buying certain stocks on every pullback to the 50-day, you'd be doing fine. I mean, some people do average up, average down, and it depends on your strategy.
All right. Well, since we're diving into, you asked me what I'm buying. What are you buying? Apparently a little Avalara, huh?
A little software, yeah. I mean, are we jumping right into this, or we want to go back to the 50? I don't give. There's no real order.
Oh, hell yeah. Let's go into it. You got to give the people what they want, Joe. They don't want us bullshitting about global macro environment. They want the trade.
Yeah. Software's been very, very strong. What Mark Andreessen said, whatever, 20-something years ago, software's eating the world, and it still is. Software companies are awesome because they run at such great profit margins, and there's so many. I think people are underestimating that so many companies are still slow to move to the cloud. Even like government agencies, they take forever. So there's still a lot of growth, amazing growth in a lot of software companies growing their earnings and sales 30, 40, 50%. There's a lot of companies like that. I own a bunch of software names. This is one of them that I bought a couple weeks ago, 170 something. And then I was on IBD Live last week and I said I added to it like high 170s, and it's just moving out of a big base. I like the story.
Yeah, how high do you think it goes?
I think I could see like 220 within the next 6 months or so. I could see a nice sort of like 30-40% gain on this one. Everyone has different time frames, but I could see, I mean, longer term, I haven't really thought that much into it. It's more of a medium term swing trade.
And then, so what is it going to take to prove the thesis invalid? Like, where are you wrong?
If it breaks, usually my guideline is a break below the 10-week. So if you had any sort of decisive break below the 10-week, just because that's an area of institutional support. And it had I look at the weekly charts, a lot of tight closes. You can kind of see it there before it gapped up. There was a lot of tight closes in that range, showing that there was some nice institutional support before it took off. But if it broke the 10-week, it'd be my stop.
And do you differentiate between the 10-week moving average and the 50-day moving average, or is it about the same?
They're about the same. That's a great question. And I look at both charts. I mainly like to use the 10-week, but it's pretty close to the 50-day on the daily chart. I mean, they're pretty close on most charts.
Interesting. Okay, great. Listen,
which one do you use? Which one do you use?
I don't use any moving averages.
You don't? Okay.
No, I mean, listen, I'll use the 200-day moving average. We use moving averages more to quantify the analysis, like percentage of stocks above or below where they are relative to those moving averages. But on the chart itself, I don't use any. I mean, listen, again, everybody's different. I know very, very successful technicians and portfolio managers that use moving averages. I just, it's not for me. It's fine, right?
I always say, all sorts of indicators and moving averages and everything on charts it's like a personal thing. I always say, do what works for you. Some people get really upset if you're using something or not using something they're using. I'm like, who cares? Just do whatever works for you.
Yeah. I don't care what moving average this guy has on his screen. That's his problem. Joe Fahmy wants to use the 10-week moving average. Fine. That's Joe's problem, right? Like, maybe we'll agree on something else when we're having dinner at a steakhouse in Las Vegas. We'll probably agree on what we're going to order. Or you just say, JC, you get whatever you want. I trust you.
Exactly.
Okay, let's go to the next trade. Affirm Holdings. Man, look at the monster base throughout the spring into the summer. I was taught that you want to buy smiley faces and sell frowny faces. This looks like a smiley face to me.
Yeah, I discussed this with my educational members. I got lucky. It was a couple weeks ago. In like the 65, 67 range, how I like the fundamental story with this. Some people way smarter than me that I have context with on Wall Street or really like this fundamentally. I just try to, I'm smart enough to know when I don't know a lot about something, I'll just go to other people who are smarter than me to learn. Anyways, they really like the story. I took a small position and then got really lucky. For last Friday after the close, they announced a partnership with Amazon.
Nice.
And it was up like 40%. It's again a lucky trade. Don't get me wrong. I have a lot of losses that I get stopped out of. But anyway,
And then, of
what I
course, Fahmy, when you get lucky like this, you definitely owned enough, right?
I never own enough. It was actually a small position, but then what happened was I was like, because it was a small position, I didn't take profits. I wanted to see how it acted. This is where I use unusual option activity that might give me added conviction in a story or something. Monday, they just came out and started writing puts on this. I'm looking at they started writing September 85 puts, October 85 puts. For people who are not sure what that means, that's a bullish sign because those are willing buyers. They're not buying the puts, they're making the markets and writing the puts. So doesn't mean it's going to work out, but that's a bullish sign that they're willing to buy on the dip. That happened Monday. And then also this week, they started coming in with September 100 calls, September 115 calls, some October 115s, 120s. So, and we're not talking 5 or 10 contracts. We're talking 10,000 contracts on some of these. So I think it's going higher over the next 6 months based on that activity.
And what's the target? Those former highs?
I could see this going above 150. Yeah. I mean, it's going to take some time and it's going to be volatile, but based on the option activity and the partnership with Amazon, they have earnings coming up on September 9th. So that might give a little bit more clarity, but I mean, it's not just the Amazon partnership. They're doing $1 billion in sales, run rate of $1 billion in sales anyways.
So in a situation like this where, quote unquote, you get lucky, but I got to tell you, when you position yourself in opportunities over time, you're going to find yourself getting lucky quite often. So kudos to you. It's not just luck. You put yourself there. But fine. So you got, you were fortunate in the situation. Now you're deep in the money. How do you manage the position moving forward in a situation like this?
I mean, you could use the low of whenever something gaps up, the
Yeah.
low of that range on a few days. That's a common technical thing
Yeah.
to do. I like that there's put writing at 85. So sometimes when I'll be honest, if I'm unsure, where, when it's not often you get a big gap like this, but I like the put writing because that means there's willing buyers there. So that would probably be my floor on it as well. So, but it was a small position. So I'm happy to let it run.
Interesting that you talked about the low from the gap up, because when we were talking offline, I was like, is this a gap and go? Do you believe in gap and goes? And you're like, well, yeah, when they work.
Yeah, when they gap and they go, of course I love them.
Right.
Usually a strategy on a big gap on a news or earnings is to use the low. If you're aggressive, the low of the first hour. If you want to be conservative, give it a few days and use the low of a few days.
Yep.
Just depends on your strategy. But I found it stabilizing in that 92 to 96 range short term. So that's a short term sort of level. And then we'll see if over the next couple of weeks, if it runs into its earnings, what happens.
It's great advice. Great advice. And I totally agree with you there. What I want to point out here is that this company, like so many in the growth space, peaked in February, right? We talk about what the NASDAQ 100 is doing, what the S&P 500 is doing, what the Dow's doing, but most stocks peaked in February. Sure, some stocks have been doing well recently, but most stocks have not. This is another example of it peaking in February. You could really broaden that out and look at the IBD 50 index, which consists of 50 large growth companies, and peaked in February and really did nothing ever since. And now it's starting to pick up steam, right? So things are starting to change.
Yeah, I think that's sort of the big elephant in the room that we should discuss is that if you trade growth stocks and you have a concentrated group of growth stocks, and a lot of people like the momentum growth names, I over the last call it 3 or 4 months, a lot of people I've been talking to are incredibly frustrated. And they're incredibly frustrated because the S&P is like literally X equals Y and just keeps marching and marching and marching with minimal corrections. But a lot of growth stocks beneath the surface have corrected 10 to 30%, or even some even more. So I think the first question we have to answer is, why is this happening? I think it's a lot of it has to do with the sector rotation, and a lot of it has to do with the large cap weighting of those top 10, FANG names.
No doubt about it. And you could really see it just across the board. This is the IBD 50 peaking in February, really struggling ever since. Emerging markets really doing the same thing, peaking in February, struggling ever since. And then a lot of these growth areas, a lot of the Fahmy stocks, as I like to call them, the IPO index is obviously full of Fahmy stocks, biotechnology, all peaking in February. So a lot changed since then, which I think is, it goes unnoticed.
Yeah, what a lot of people forget is that I think there's a lot of newer traders that forget things consolidate and forget that after a stock or an index makes a huge move, they forget it needs to consolidate. Like I could think of 10 or 20 stocks off the top of my head that were up between 100 and 500% last year. That is insane. Okay, like what's the line from the movie Boiler Room? If you show someone 3 points on a stock, they'll trust you babysitting their kids for the weekend. Like, I mean, the point is, or whatever the line is, the point is, it is so rare to get a stock to go up that's going to be a double in a short period of time. And there is a whole bunch that went up between 1 to 500% last year. Your Zooms, your Teslas, and a lot of them are in the ARK Innovation Fund, which you pulled up. So what people forget is after it makes a big move, you have to digest that move. I even tweeted out, some will never come back. Some will take a long time to come back. How long, nobody knows. And then some will rise to the top and base out and eventually show great relative strength. Let's not forget when Microsoft, Intel, Cisco made monster moves in the 90s. Some of them took 13 to 16 years before they made new highs, and some of them haven't even made new highs. So what happens is when a stock goes up 100 to 500%, how do you not fall in love with these names? People, especially a new generation of investors, literally married these stocks and they are never, ever selling them. I'm not saying to sell them. I'm just saying they are married to them. So the point of this mini rant is when they correct, they all start crying. And even when you pulled up ARKK, I mean, it was up 150% last year and it's off its highs by 30, 35%. That's actually a normal retracement considering the move. But people are like, no, I want all my stocks to go up every single day and I don't like this. But it's actually really normal what's happening. I think the frustrating thing is that because of the weighting of Microsoft and Apple and Google on the S&P, as well as the 11 sectors in the S&P, because of sector rotation, it's keeping the S&P propped up while a lot of growth stocks have been correcting, to your point, since February.
Yeah, if you look at the value line index, you look at what small caps have been doing, mid caps, micro caps. When you look at the average and median drawdowns in the New York Stock Exchange, in the NASDAQ, you just have over 20% average drawdown, median drawdowns around 15%. So when people are like, oh, JC, you think the market's going to correct? It's like, well, what do you call the last 6-7 months? I mean, most stocks have been correcting.
Well, yeah, I mean, you had an awesome talk, by the way. I tweeted it out a couple times with Josh Brown and Mike Batnick talking about this. And the question is, what do you consider the market? And I think the answer is different for different people. For some people, it's the S&P. For some people, it's global. For some people, the market is the group of stocks that they're in. So, but for the most part, you're absolutely right. And I think this is a great overlay of all these charts. They all look the same, and they've been correcting since February.
Yeah. So where can everybody find you, Joe? Tell everybody where they can reach you.
JoeFahmy.com. I have an educational product, which I love, and it's I do a lot of videos, a lot of webinars, talking about a lot of education, a lot of technical stuff as well, market sentiment and so forth. So that's where they can find me. They can find it on the website.
All right, so Fahmy likes Avalara, AVLR. He also likes Affirm Holdings. I like the Cardano. Fortunately, we've been on the right side of this. I like adding to winning positions. So that's exactly what we're doing. Mr. Joe Fahmy, do you want any fruit? You want fruit?
I forgot to, I always bring snacks to Zoom calls. I just, no one ever takes them up on me. No one takes them up on me.
Any fruit? I got some fermented grape juice.
What are you drinking?
I got a Vino Verde. I got some spicy wings. I got some Thai chili wings that have been in the slow cooker all day. So because they're spicy, I need something to counter that.
All right, that makes sense.
Yeah.
How are things with you? Everything good?
Man, thank God everything's great. Family's great. Business is good. Fortunately, we've been on the right side of the market. That helps. 1-year-old keeps me busy. That's for sure, Joe.
Yeah, no, that's awesome. Also, before we forget, we did that call in the beginning of the year with about 10 or 12 traders. Jay Woods won the contest, so we need to do a follow-up very soon with that. We said we'd do it in mid-year, but so a lot of people got caught up in the summer, but we need to do that for sure soon.
What we'll do is we'll do you, me, and Jay Woods, and we'll do a video. We'll talk about that particular trade, how it worked out, and then we'll see what Jay has to say now.
All right, perfect. Love Jay, so we definitely have to get him on and make a donation in his name to the charity, so as well, because he won the contest. So
100%. All right, guys. See you next time. Thanks, Joe.
Thank you.